All right. Hey, what's going on, everybody? Chris Prince with Texas West Capital. It is just after 11 a.m. Central Standard Time here on Friday, what is today? The 15th of August, 2025. Hopefully, you guys are doing all right. Hopefully, you did survive this week with the CPI, and everybody got excited, and then the PPI, everybody got scared. And so that's kind of what happened there. We're going to talk about all that. Fed and the rate cut potential that we've been looking at in September, as well as some charts here. Look at Bitcoin, Ethereum, stock indexes, Tesla, stuff like that. So just a warning ahead of time, TradingView is working really slowly for me today. So I tried to get some charts loaded up on there, and hopefully we'll be all right with that. But anyway, before we get going, do me a favor, hit the thumbs up, hit the like, hit the subscribe, follow me. Share the link, guys. It takes 2 seconds to do it. You get, hundreds, if not thousands of you watching each time, and very few are actually doing these things. Just do them, guys. I give you a whole bunch of information and time here, and that would help me out, and it doesn't cost you anything, right? So anyway, good to see y'all checking in. Let me see. Fibbo, I saw a thing about, is Fibbo going to be here? No, he tried to be. He got stuck at work, and so he won't even be able to leave out of work for another couple of hours. So he said he might try to show up into the comments if he can, but unfortunately, he was not able to make it out of there. They've had a pretty crazy summer at his day job, so y'all give him a little slack. He'll be back. He did record something with Crown today, though, and that's going to be released tomorrow, so you can be looking for that as well, okay? Let me see here. Daddy, you saw me moving the 4 on the chart this morning, more or less in real time. Yeah. Those of you that don't know, if you're not at TWC, I post live charts for the folks there, and that way, whenever I update them, if they've got the live chart pulled up, or they pull it up afterward, they can see the changes on the chart. So there you go, right? Anyway, so how are y'all doing? Seriously. How are y'all? Are y'all doing all right after this week? We had CPI came out on Tuesday, and we had headline CPI was slightly lower than expected, which was good. And then core was slightly higher than expected, wasn't so good. Now, you have to understand with the Fed, they're looking at core CPI, right? They're not looking at headline. They're looking at core CPI. And so that's issue number one when you start talking about, okay, are they going to be able to cut or not, or are they going to cut or not? Now, if you'll remember, the unemployment that we just had came in really low, right? Came in really cool. And then the last 2 months were adjusted downward like 258,000 or something jobs. So that alone, the job thing would say, okay, well, the Fed may be interested in cutting rates, right? But then we got the CPI, and the CPI was mixed there. And more importantly, the heavy side of the mix, the one that you don't want to see if you want the rate cuts, is that core CPI was coming in a little bit hot. Then we get to PPI, Producers Price Index, that came in yesterday. And holy hell, that thing shot over, right? That thing was way over what was expected. And when it does that, usually that's signaling that the inputs to make the products the prices are likely going to be rising into the next few months. That's inflation, right? Higher cost of inputs into the goods means higher prices of the goods, right? I mean, you get your higher prices. Now, usually with the Fed, so you're looking at the Fed has 2 mandates, right? It has employment, maximum employment, and then to keep prices steady, right? Which means employment and inflation. That's what the Fed's looking at. Now, even though we had this big miss on jobs, right? It was a lot lower than expected and big adjustment for the past 2 months. And unemployment ticked up 0.1%, right? Still at 4.2, 4.3%. This is historically low. I've told you guys time and time again, the Fed really considers maximum employment like that 5.5% really kind of area. So we've been well below 5% for, 2 years now, something like that. If this is not the longest period we've been this low, it's pretty close to it. maybe sometime in the 70s, it might have been a little bit longer. But so when we're looking at that, the Fed isn't really all that concerned, right, about employment. However, so if it's not really so much concerned with employment, then that means inflation is going to be driving what the Fed does, most likely. And as long as CPI, PPI continues to look like this, and unemployment or jobs, as long as jobs doesn't continue to rapidly decelerate over the next 2 months, it's completely up to what CPI and PPI are looking like. That's what's going to determine whether the Fed actually cuts interest rates. Is this making sense? So we've been looking at the likelihood of a September rate cut. And now that we're coming up on September with what just happened, I think there's a lot less chance. I'm not saying it can't happen, but I'm thinking there's a lot less chance that it does happen. Because, again, unemployment is still historically low, so the Fed's main focus is on inflation. And if you're cutting interest rates, that's going to what? It's going to make loans cheaper, right? And that increases money, right? That increases the money supply. Not something you want to do if inflation is rising, right? So with the PPI data that just came out, it suggests there may be a reacceleration of CPI of inflation. And if inflation's reaccelerating, I don't care what Trump wants Jerome Powell to do or what he thinks he wants him to do, right? Powell is showing that he's going to be steadfast against political pressure. Now, this has happened. This was back. Let me say this. Most people online, and maybe most of y'all, you're just automatically thinking rate cuts mean more liquidity, which means yay, dollar go up, right? And then you're also thinking, well, when you start cutting rates, usually it's, you probably think it's always associated with the recession, right? But that's not the truth. It's not always associated with the recession. Often it is. But there are multiple periods like 85, 86, late 94 into 95, 2019, where the Fed cut interest rates and there wasn't a recession, right? So why is the Fed cutting rates? And I've talked about this many times before. Why is the Fed cutting rates? That's the question. Don't just assume because they're cutting rates, there has to be a recession and whatnot. And now this opens up new possibilities. If we look at this and we go, okay, well, what is going on right now with what's going on with CPI and PPI and unemployment and inflation, all this stuff, right now is really similar to what we saw in that late 94, 95 period. Now, remember, at that time, the Fed continued to not cut rates for a bit, right? They let unemployment continue to do its thing, and the jobs do its thing, but they didn't cut right away. And so they weren't when they finally did cut, it wasn't in response to some emergency, right? It wasn't because, oh my God, things are down and everything's going to go to hell if we don't cut. Is this making sense? And so what happened? We had the boom into the late 90s, right? It is possible we're seeing the same thing setting up right now. It's possible we're seeing the same thing setting right now. The conditions with inflation and with unemployment and with everything that's going on is very similar to what we had in that late 94, 95 period. And what does that mean? Well, that means, we may just continue going up for another 2 years, maybe more. Now, I'm not guaranteeing this is going to happen, but I'm trying to get you to understand that the nonsense that's spoken out there, again, I keep telling you, a lot of the stuff you find online is going to be half-truths and outright lies. The stuff that, when people are talking about markets, there's a lot of misinformation out there. And if you're not willing to do the homework yourself, or maybe you don't even know how to do the homework, right? It's, macro stuff is not simple to do. It's not initially intuitive right from the start. So you have to be careful out there when you're repeating stuff that everybody else is saying. And that happens a lot, especially now with social media and these big accounts, right? Folks, the fact is a lot of these big accounts don't have much more experience trading or markets than you do. Let that sink in for a moment. A lot of those accounts out there don't have much more experience than you do. They're just good at marketing. They're good at talking. And you got to be careful out there if you're, looking at them for what should happen. Now, none of this says we can't cut rates in September and, we can't have a recession coming up. But right now, nothing is looking like that. Again, the things that are going on right now are very, very, very similar to 94, to late 94 into 95. And because it is, you should be open to the idea it could continue to push higher. Now, what does that mean? That doesn't necessarily, for Bitcoin, for example, mean that we get a huge blow off top. We have been making these measured moves up with Bitcoin this entire cycle, right? It's been nothing like anything that's ever happened before with Bitcoin. It rallies up a bit, stays sideways for a while, rallies up a bit, maybe pulls back, retests as support, rallies up again, moves sideways for a bit. That's all we've been doing, right? If you look at a Bitcoin chart, you will see there's been no time that's been really like this. And so, again, does that in and of itself mean that we have to extend longer than, the usual 4-year cycle? No, we don't have to. But I think there's a good chance for us to do so. So, what does that mean for September? Well, right now, my idea is that there's a lot less chance that we're going to get a cut now. We'll see what happens coming up in what's it called? The jobs report. We'll see how that looks coming up in May. Again, what you need to look at is if the jobs report, I said in May, in September, in October, show a strong deceleration continuing from what we had in August, then the Fed might be much more likely pushed to cut. But as long as that's not happening and CPI and PPI continue kind of pushing higher, I think there's little chance that we get a cut. Because the Fed's got the dual mandate, the unemployment and the prices. The prices are, dealing with inflation. And if unemployment continues to be historically low, there's no real pressure on them from that point to raise rates. Unlike the big accounts, which have been yelling at you for months and months, maybe years now, right? Oh my gosh, unemployment went up. It was expected to be 4.1. It's 4.2. Oh my gosh, the Fed's got to cut. It's the dumbest dang response right there, right? It's historically low, which means most of the pressure on the Fed to cut is going to come from what? The inflation side. So that's where I'm sitting right now. And so what does that mean? Again, if there's no cut going on, and prices have been continued to rally as it is. We know that Bitcoin is continuing to get huge, money flowing in from corporations, which have overcome the amount of money flowing in through ETFs, which was already huge, right? Now we got Ethereum doing its thing. And by the way, nanny boo-boo to all y'all that were complaining and whining about Ethereum, and I kept telling you it's going to hit a new all-time high. And y'all just whining out there and crying about how it's so dead and blah, blah, blah. Stop listening to your big accounts, guys. I mean, just in general. I'm not saying there's not some good ones out there, but my God, when I look at the amount of noise and trash that's coming out of those accounts, it's ridiculous. How are y'all ever going to expect to understand what's going on and getting better if you find yourself just listening to the nonsense? But that's why I'm talking like I'm talking, is I'm trying to get you to understand what's really going on and what's most likely to happen and what you should be watching versus all the regurgitated, found online free nonsense that most of your big accounts regurgitate, right? So anyway, money's still flowing into Bitcoin. Oh, by the way, Coinbase, I talked about this just briefly on Beards of Bitcoin on Wednesday. Coinbase hit 75% institutional flow, right, for Bitcoin. So 75% of the activity happening on Bitcoin on Coinbase is institutional money, not retail. Guess what, guys? Retail is not that special. The crypto market is becoming much more like traditional markets where institutional money is what drives it. Okay. Now they're going to use you. They're going to use you as liquidity along the way. Sure. Why? Because you allow it. So they're going to do that. But most of that movement in price is coming from institutional involvement. And then we've got, again, that institutional involvement that's been, running up really hard through Ethereum as well. And now you've got these companies out there. They're just skipping the whole layer 2 and they're, launching their own layer 1, right? Stable coins is layer 1s there. I mean, so, there's basically retail narrative, and then there's what's really going on for the most part. What do you think about an extended cycle? I think it's very real. I think there's a very good chance. And I got caught up in some things here. And I haven't been able to finish out my Bitcoin piece that I told you guys about a few weeks ago. I'm going to do everything I can to get that out this weekend. So if you're not, signed up for free there at hashandhedge.substack.com, be sure to do that, because that's where I'm going to post it. But it's going to talk exactly about the extended cycle, and it's going to talk about super cycles, and it's going to tell you what's required, and are we there, or are we going to get there, or will we not get there, and which one's more likely and why, and what are the things that you should be looking at. That's where I talk. But I'm very much in the camp that I do believe we'll probably get an extended cycle. Throw the link in the chat. Gonna make me do this in here, huh? hashandhedge.substack.com. I've got the Hash and Hedge website. I just need to get it set up with that. Let me see here. There we go. You guys should see that over there now in the comments. Let me see here. I've heard intelligent people, they say that it's going for another year, or at least Q2 and Q4 of next year. Yeah, very, very good possibility, and maybe even longer. But again, we'll discuss that, right? I'll discuss that in that piece I'm writing up there. And for a lot of people, it's hard to understand, right? But Bitcoin is effectively different this time around. And I've been in markets, guys. Listen, I've been in markets since 1995. Equities, futures, precious metals, energy, FX, crypto. I'm going to tell you, there's no difference between them, between the people in them. All right. Especially new traders coming in. And so, the thing is, and with cycles, so I don't use the term, things will be different this time, or things are different. I don't use that lightly. But this is something I've been talking about since January of last year, when the Bitcoin ETFs came online. And so, and everything that's going on with the Trump administration right now, like them, hate them, whatever, I don't care. I'm not trying to give you a position on politics on him. But what I'm saying is, a lot of the stuff that they're doing is loosening up the machine a bit. It's making it easier for business to be done. Now, whatever your opinion of how that's going to end up is your opinion, whatever, but it doesn't negate what's actually going on. And so when you add that and this embracing of crypto now, I mean, yeah, and then you've got the already, all the institutional money flowing in through ETFs for the last year and a half, right? And now you have all the Bitcoin treasury company, all the corporations putting money in there coming in, right? It's set up to extend. It is set up to extend. Okay. Now, does that mean everything goes up and everything's great all at once? No. But what we're talking about is generally the economy itself should continue, overall moving up, right? But remember, your financial markets are not the economy. They're two separate things. But if your economy is getting better, generally speaking, you have little to no reason to think that the financial markets won't continue up, right? That's why, but they're not the same thing. That's why sometimes you can see the economy deteriorating a bit, and then financial markets will still continue to rise. So here's where we are. So what does that mean to you as a trader? You've got to be prepared, right? Bernardo brings up a great point here. He says financial conditions are improving and people are biased against that. They are. This has got to be the most hated rally on Wall Street, excuse me, and in crypto. Because everybody's been talking for years that the top's in, the top's in, the top's in, and it just keeps pushing up. You know how we know it's a hated rally? Because there is $7.2 trillion sitting in money markets right now, instead of in stocks or crypto, enjoying the run up, making the money. It's sitting over there in money markets, making very little. When that finally pops out, it's going to be a huge influx of liquidity into the markets. So, I mean, really thinking about it, you don't necessarily need the Fed to cut rates at the moment. If you start seeing that money out, flowing out from the money markets, you're going to see, again, more liquidity flowing into the markets from that. Okay. Let's see here. Most hated rally is what Tom Lee says. I like Tom Lee. Yeah. I like him. Scott, I appreciate you checking in, man. But yeah, so, again, guys, I've been doing this now publicly here for going on 8 years? September 11th will be 8 years TWC has been in business. And it was just a few months after that I started doing live streams and YouTube and stuff like that. Some of you that were around back then may remember I didn't have my face at first. Scott Milker was the one that said, dude, you got to get on there. So that's why I started doing these. And then he's like, dude, you got to get your face on there. So it's all because of Milker that you have to see this every week if you log in. But my goal from that time has always been, listen, I want to give you the realities of trading and investing, the realities of the markets, the things that, because everybody out there is just repeating the easy to find free stuff online, which is the same stuff before there wasn't online. It was the same stuff that I dealt with when I first came in 30 years ago, 1995. It's crazy. But so when I say, most of the free information you find online is a half truth or an outright lie, I mean it. It really is. And, and so traders think they're going to come in and they're not going to spend any money on learning and they're not going to get anybody to help them do it. And for most of them, they end up failing because they're following all this stuff that everybody continues to parrot online. Even the big companies repeat it and write it down on their websites and their trading fundamental stuff or whatever. And so, again, if you're continuing to follow that without looking it up and trying to find out if it really is legit or maybe it's not telling the complete truth, you're gonna end up losing your money as well. And so that's what I'm trying to help you avoid here. I mean, you're going to lose money, period, end of sentence. But I'm trying to make sure that you're not losing it as badly as you could be. I lost it very badly at the beginning. Very, very. Let me see here. Did I teach Milker? Yes, he came in as a student. He was one of the first ones to join back in the day, to join TWC when I first launched it. And then he ended up he was doing well, so I brought him on, and he was working with me for a bit. And he said, man, we need to do a newsletter. And I'll be honest with you guys, I was just doing this, and I was trying to figure it out. And I was like, I don't have the bandwidth to do a newsletter. I'm thinking to myself, how can I do that with everything else I'm doing? And so he went off and started his newsletter. And he's just growing from there, which, man, I'm really proud of him. He's really done amazing. But yeah, that's how all that started back then, which is kind of cool, right? Kind of interesting. When you can see somebody grow big like that, just it's insane. But he already had a basis for his trading and whatnot going on. Just being with TWC, he was able to refine it and understand a bit more about what's going on with markets and whatnot. And since that time, I've obviously continued to add those that have been with us still to this day. We have people who've been with us for 5+ years, guys. And they've seen we continue to evolve, and we've tried a few things and it didn't work out, and, continue to just grow there. And we really just focus on this idea that, man, we're really a learning platform. We're a teaching platform. The goal is to provide the correct information and the stuff that people need to understand to hopefully make them better traders. Now, I can't guarantee you're going to be a better trader, that you're going to be consistently profitable. But what I've noticed is at TWC, when people come in, if they show up, if they watch the trainings, if they go through the courses and they join in, or at least watch afterward the live trainings that we do every week. If they're showing up at the live trading, if they can do that, the ones that are showing up and discussing and talking amongst the other students there, those are the ones that catch on the quickest and learn the best. And this makes perfect sense. We know that active learning, which is instead of just consuming, you're also out there, discussing and whatnot. You're involved. You're not just reading, right, or just watching, but you're actually getting out there and doing things and discussing and putting out ideas and all these things. And we know that kind of active learning actually is what you should be doing at anything you're trying to learn. So I try and set up TWC in a way, that can really foster that. We've got a multitude of chat channels specific to different things. You can get in there and chat with people. And again, when you join, you see that there's a core group of traders in there. And you'll see them always. They're always in the chats. They're always on the live streams. They're always, asking questions. This is a big thing. I'm a big proponent of our students asking questions. How can you possibly know that you're right in your understanding if you're not asking questions about it? That is such a big thing that most people miss when they're trying to learn. So wherever you're learning at, ask questions. If you're at TWC, definitely ask questions. That's the whole reason we exist, is to help you become a better trader. It's going to be so hard to do that if you're not asking those questions, especially when you're maybe a little bit confused, you're not sure. Let me see here. Let me catch up with you guys here. Yeah, Alvin says it. Opportunities are plentiful every day when you have the correct understanding and learnings. Yes, exactly. And Sat says, practice, study, work hard, then practice, study, work hard, then study. Yeah, that's the way it is, guys. Listen, like right now, right? So I have never offered a money-back guarantee because it's a very difficult thing to do in our space, because people will buy and then they won't do anything. And then they'll be like, oh, I want my money back. Well, you didn't even try. But so I wanted to prove, listen, we've got enough people that have become really successful trading through us that I said, listen, here's what we're going to do. We're open 20 seats on our annual program. And if you jump in there, and there's a few things you have to do. It's listed on the page there before you sign up. But as long as you do, it's basically you have to attend and you have to keep track of your trades. That's really what you should be doing anyway. We don't make you jump through hoops, right? But if you do all that stuff and you're not a measurably better trader at the end of the year, we're going to double your money back. But that was only 20 seats. I think there's still just a few left. But if you head over to members.texaswestcapital.com, you can get signed up and take advantage of that. Also, be sure, if you do that, use the promo code TWOX, the word 2 and X, 2X. Use that as your promo code. It's on the last page as you're signing up. It's the platform makes it a little bit difficult to see sometimes. It's over on the right side of the thing there. I think it asks you if you have a promo code or something. You can click on that, put that in there. It'll get you 50% off. So not only do you get 50% off our annual, but if it doesn't work for you, if you go in and put in the work and it doesn't work for you for some reason, whatever, it just doesn't work, you're not a better trader, then you're going to get 2 times your money back here. But that only works on the annual program there, because you have to put in the effort and the time. You're not going to learn it in a month, guys. We teach you, we get down there and teach you, listen, this is how and why markets move the way they do. This is how liquidity works. This is where it forms and why. We give you easy to understand. But then you have to go and you have to practice it, right? You have to look at it over and over again to get it. Okay? So, yeah, if you want to jump in there and join us, we'd love to have you there. But I'm telling you, if you're going to do it, even if maybe you're a bit of an introvert, we try to be as open and as welcoming as possible. I do not put up with people who are disrespectful and rude. And so in the terms of service in our company, in our program, it says that if you're, disrespectful and rude to people, that, we're going to give you a chance. I'm going to get a hold of you. I'm going to say, hey, listen, this is not acceptable. Don't do it again. And if you do it again, we're going to boot you, and you don't get a refund because you knew to act like an adult, not to act like a fool, right? I've only had to do that 2 times with the thousands of people that have been through, since I guess going on 8 years now. I've only had to do that twice, but I will do it because that's the place for you to learn. It's a place where you should feel safe to learn, to ask your questions. Okay. I'm 100% about that. Let me see here. What do you think on the potential RSI bearish divergence on all big time frames if price confirms as top, monthly, 2-month, 3-month, weekly, 2-week? Well, first of all, those very big time frames mean it's going to take a while before they confirm. It just is what it is. You're not going to get a confirmation at the end of a 2-week, 2 weeks. It's showing some bearish divergence. That doesn't confirm it, right? And because it's a larger time frame, price is going to actually have to pull back quite a bit more before it actually confirms. So, when you're looking at those things, and that's a great question, actually, because, again, this is those things that you see that aren't reality online, but they have you thinking is, right? Like you'll see some large account that'll say, oh my God, we just printed the monthly and it's bearish divergence. No, it's potential bearish divergence. Why? Because the next month it can continue to push higher and pull it higher and keep it going, not as bearish divergence or as less and less bearish divergence, and could actually pull it up to where it becomes neutral or bullish divergence. Not bullish divergence, but invalidates the bearish divergenceness. Okay? So yeah, the thing is, when you're looking at the very large time frames like that, you won't find out anytime soon if that bearish divergence is actually set or if it's going to continue going and maybe just lessen as price continues to push higher. So, that's the one thing I always say, right? The other thing with RSI is that it doesn't mean because RSI hits overbought that you have to sell, that's the top. It doesn't mean that because RSI hits oversold that you need to buy because it's oversold, right? All those things tell you is if it hits overbought, it just tells you, hey, listen, we're extremely bullish. And that can continue on for a while. And the larger your time frame, the longer that can continue, right? I mean, it makes sense because you're looking at that larger time frame. But too many times people look at the larger time frame and then think in terms of a smaller time frame. And that ends up just losing you money, right? I mean, just think. If you look at what you believe is a bearish divergence right now, and it doesn't go down, price goes up over the next 3 months, 6 months, a year. But you got out because you saw right then it was potentially some bearish divergence. You see what I'm saying? So let me go ahead and pull up some charts here, guys, while we're here. Let's go and do this. Let me see. So like right now with Bitcoin, here's the daily. And this is what I'm looking at. And again, the big picture to me here right now is that this is reaccumulation with the spring. This is the jump across the creek, okay? This is your show of strength. This is your back up to the edge of the creek. Now, your back up the edge of the creek is nothing more than more reaccumulation sitting on top of the previous larger reaccumulation. Now, with this, can this dip back down here? Sure it can. On this range, we can get a spring like on this range here. We can get a spring down here and back up. Definitely possible. And if it was to drop down here, say 111, 110,000, that would not for a second make me bearish. That wouldn't make me bearish at all. Because again, looking at this range, you can look at something similar that's here, right? But it doesn't have to. We're going to look and see if we can grab a support here and rally back up because we have this smaller range right here. But if it continues, dropping, I would look right here around 114,717. That's the monthly pivot. I would look there as the next target. And if we drop on through that, then maybe a sweep down below this swing low here. So maybe getting down here around 109.5 or something. Though we could actually see it get down there to 108,252. But that's not bearish, right? Not in this macro. This is still higher highs and, and higher lows heading up from the major swings. But again, if you're zooming out here, let's say the monthly you said, right? You were talking about a monthly. And you're out here and you see this and you go, well, here's this swing high. And now here's this swing high. And we're getting higher highs here, right? But we're getting lower highs here. Oh my gosh, bearish divergence, right? Well, not necessarily. Here is actually where you should be looking, okay? See this right here? This swing high and this swing high? Where it went higher in price? That was the bearish divergence. And you got that big pullback. What happened after that? Now we have this swing high over here and this swing high over here. We got higher highs. We have higher highs here. Here we go, right? That's all we're doing going up. But everybody's going to look here and go, oh my God, it's from here all the way over here. No, it's not. It's from this swing high to this swing high. Your two swing highs there. You get the lower swing high on the oscillator, higher swing high there in price. There, that was bearish divergence that led to this pullback. But now up here, you don't start looking all the way back over here again. We did that. This is the last swing high now. That's that one up there, right? So we look at that to the next one, and it's just bullish divergence there. And then we look at that to the next one, and then the next one to the next one as you continue going. And that's how you should be looking at it. Does that make sense? So, yeah, so when you're looking at it, you got to be careful. Don't just do this because everybody else does that, right? Here, it makes sense, right? Maybe like from here to here. Because you're in this uptrend here, so you're going to go from this swing high to this swing high. This swing high is not part of a lower low. This is part of this movement up. So you're not going to look at that. You're going to look at this swing high to that swing high up there. And that got you that bearish divergence right there. Well, the bearish divergence would lead to that drop. And then you had more bearish divergence, which led to the bigger drop. But you have to know where you're looking at there. You're not looking just because this is up here and this was the big up here and just ignoring all this. But see, what if you just sit there and you follow on what people are doing online, right? What the majority of people are saying and what they're doing. Well, guess what? You're going to get what the majority of people get. And what do we know about the majority of retail traders? They lose all their money. But see, if you don't know all this, it makes sense that you would think, oh, well, look, yeah, okay. Yeah, there and there, and now there to there. Sure. Or all the way over here. I'll just keep pulling it over. But now you know. Now you know it's not as simple as that, right? You have to actually look at the swings. You can't just ignore them because you want to ignore them, right? Because it makes the narrative better in your head if you ignore it and do something else. I'm telling you guys, we're really, human beings, we're really good at lying to ourselves. We're really good at minimizing the bad decisions we make and giving a lot of focus to the good decisions we make, right? So we're not realistic. And we do that because we don't want to be wrong. We don't want to make a mistake. But the problem, again, as I continue to say, is if you're not acknowledging when you're making wrong decisions, or even when your decision just isn't working out the way you thought it was, if you're not acknowledging that, you can't go back in there and view it and go through and go, okay, what could I have done better or different? What could I have done that would have changed this outcome? So that way, next time you don't make the same mistake or you don't make the same choices. You make the better choices, which give you the better outcome. But as long as it's always somebody else's fault, as long as it's always minimizing your involvement in the bad decisions you make, right? You're not going to be able to do that. And that's why we repeat the same things over and over and over again. Man, I knew that master's in psychology would help me out one day. But yeah, you see what I'm saying, guys? So anyway, so that's what we're looking at with Bitcoin there. Overall, just watching how it plays where we're at right now. Let me see, reset that. I mean, normally speaking, if I'm looking at pivots, I get a breakout and it rejects the R1. Most of the time, I expect to pull back to the pivot, unless there's a lot of sideways right there, in which case I just initially expect to pull back into this sideways, and then secondarily, pull back into the pivot. But that's just pivots alone. That's without any other consideration about wave counts or anything else going on there. So yeah, this is my initial target area. We're there right now. Do we hold there? We'll find out. High volume node, or do we drop on down, start getting into the bottom of the high volume node, into the top of the low volume node, where the market's less interested? Right here, rejection, 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 pop out, rejection, rejection, come back up here. Do we get down there, or does this high volume node provide that support? It really is as simple as that. You don't have to make it as difficult as most people make it when it comes to trading. Okay. Let me see here. So we've got that there with Bitcoin. So that's what I'm looking at Bitcoin. That's just the easiest, simplest way to look at it is, do we hold here and rally back up? And if we do, by the way, if we do here and hold back up, we're looking up here toward this 130,000 area. Based on the height of this pullback, gives about 129,143 or so on this chart would be the next kind of pattern target on the way up. And is that going to be the end of Bitcoin? I don't believe so. I believe, we're still headed up, 150 and beyond. I don't see any reason not to follow through with that yet. And again, with this being reaccumulation here and this appearing to be a back up the edge of the creek, we should be expecting more movement higher, because we didn't get a whole lot of movement out of this from this long bit of sideways. We just kind of came back and we did more sideways. And so there's an idea in the Wyckoff method that basically says the longer you're going sideways, the stronger and the further your breakout's going to be when you finally do, whether it's distribution downwards or it's accumulation or reaccumulation upward. The back of the edge of creek just kind of extends your initial reaccumulation. Just a secondary reaccumulation on top of the major reaccumulation, leading to head up higher. So where does this have us with Ethereum? Well, here's Ethereum. So as you can see, we came 48.67 on Kraken, Ethereum USD. That's the all-time high. We got up to 47.90 and 39 cents. So we got up within, about $70 or so of that, right? Now, are we going to break out? Well, again, I've been telling you forever and a day that we're going to get a new all-time high. So here's the trade right here that you should have taken. You had this pullback here to the monthly pivot. You have a bullish engulfing candle. Very low volume. I'm going to pull that back up there. Very low volume there. And it just took off. And so just to that point was already a 5.8 hour trade. So you made $5.79 for every dollar you risked down here. But here, I can get rid of this now. But here we have, a 1, 2, 1, 6, 1 8 right here. 3, 4. It looks like 5 is complete. We have a bearish engulfing candle. We're getting some follow through. So I'm looking at this as most likely 5 complete there. We get a 3-wave pullback. 50% is right here around $4,000. So unless we get like a flat correction here, so like 3 waves down, to maybe 41.5 or whatever, 3 waves back up and 5 waves back down that same area. As long as we continue going down through there, I think it's just 3 waves down toward $4,000. And then we look for our next move up, and then we break out through that all-time high. Based on the height of this pullback, you've got a simple pattern target at 13,791. Okay? So that's what I'm looking for. Overall is continued higher. And so from where we're at, that's probably 3 times. Well, it's 200% higher from where we're at right now. Just to get the pattern target there, So again, looking pretty good overall on that. I think this is just like the first wave up, or I guess, this whole thing is still working that first wave up off that swing low back down here at $1,384. So yeah, looks good. Let's see here. Seth says, I told some of my newbie friends to buy Ethereum on June 28th. Did they do it? No. Have you been sure to just send them like screenshots now with little arrow pointing there saying, told you to buy it here. Here's where you are now. If you had put in $1,000 there, you'd have this much now. That's what you need to do. You need to let them know this is what's up. Let me see here. Again, stocks looking fantastic. I mean, we just got a pullback really to the R1 pivot here on the monthly. That's all we've done. Small little pullback here. This is the NDX. So the NASDAQ 100 here. So again, rallied up through. Remember over here when everybody's like, oh my God, it's the end again. And here on this Friday on the market wrap for our students, and we've got some of them here in the chat, they'll attest to this. I told them right then, I said, listen, I think that's the low. I think we go up next week. I think this is just like what's going on here looks a lot like what happened last August 5th or whatever it was, when everybody was scared about the yen trade imploding. That was their excuse. And back then I said, no, I said, we're heading up, and we did. Same thing here. I told them, listen, everything seems kind of similar minus that part, but I expect we'll likely go back up. And here we are, new all-time high, right? So here we are pulling back, and right now we're trying to get a buy in here right now. We're trying to get some buying going on off this pullback low here. We'll see how it closes at the end of the day. We've got about another 4 hours left in the trading day, but futures, again, after 1 p.m. Eastern, they kind of seem to the volume peters out on it. Everybody kind of getting ready for the weekend and all, which means it's open for some ease of movement if somebody comes in with a decent buy order coming in there. But nonetheless, simple little pullback. I don't for a second believe that we're at the top. We have a pattern target based on the height of this pullback here at 24,208. And I think we continue higher from there as well. But right now, that's kind of our local target that we're looking at. But it's, similar thing happening here. By the way, that was NDX. SPY is here. So we got the all-time high sitting there for 646.19. We gapped up, pulled back, rallying back up here. Again, right at that R1 pivot on the monthly. Pattern target here based on the height of this pullback, 652.90. That's kind of the next area we're looking at. No reason, I don't believe right now anyway, to believe that the top is in. The absolute top is in. Okay. Let's see here. So you have a more positive outlook on Ethereum. So you have a more positive outlook on Ethereum than, say, Bitcoin. What do you mean a more positive outlook? I think they're both going up. Do you mean, do I think Ethereum's going to give you a bigger return? Probably. Yeah, I mean, it's an alt. They tend to outperform. From here on out, anyway, we're coming up from there, I guess. But yeah. But does that mean you shouldn't be in Bitcoin? No. If your reason for not being in Bitcoin is because, oh my God, if it gets, what are we at right now? We're at 117,385. Oh my God, so it has to get to 235, 236,000 for me to double my money. If that is your thought with Bitcoin, you completely missing the point of Bitcoin. You completely miss it. There are two things you should be focused on in your life. One is making money, okay? But that isn't the only thing. But that's the only thing people tend to think about, right? The other thing is, how do you protect what you already have? You get something that acts as an inflation against that or acts as a hedge against that inflation. That's Bitcoin. Does that mean you have to put everything in Bitcoin? No, you don't. But listen, I'm going to be honest with you. Especially if you haven't learned how to trade and you are not consistently profitable, pretty much everything you're putting in, you're going to lose in the markets. Period. End of sentence. You're not guaranteed to make money just because it's a bull market. That's one of the biggest misnomers out there is people say, oh, well, it's a bull market. Everybody makes money. No, most people still lose money in a bull market because they try to get cute. They try to play little time frames. They try to overextend and over leverage and oversize and all the things, no proper risk management, all those things that you absolutely cannot do if you want to be successful. So they get in there and they try and they mess up and they screw up and there it goes, right? Don't think that just because it's a bull market, you're going to make money, guys, or any measurable amount of money, anything significant. Can you? Yes, you can. But you have to learn, folks. You have to learn. And what we know is most people can't learn on their own. They can't do it. I didn't do it on my own. And I'm a smart freaking guy. But I got help. And I went in and I was willing to pay for that because, hey, I wanted to learn as quick as possible. Once I figured out I needed to. I was like most people when I first started, didn't think that I need, I thought, hey, I was just going to come in, I was going to make easy money. That was all there was to it. I had to humble myself. But man, the leaps and strides I made when I started finding people to help me along the way, man, shrunk down the time it took me to learn and time it took me to get consistently profitable. That's what all of y'all should be seeking to do. But when it comes to Bitcoin, again, so what does that mean? So yeah, you should have some money. I've been saying this for the longest time. Even if you're a trader, you should have a bag of Bitcoin that you hold that you just don't touch. Just let it go up. Because no matter what you do with your trading then, no matter how bad the trading gets, you're still at least going to have that. Right? You're at least going to have that. And as the value of the fiat continues to decrease, the value of that Bitcoin is going to increase. It's not because there's anything special about Bitcoin, guys. It's because money printing continues. That's why. So the rise in value of Bitcoin has much more to do with the increase in the printing, the devaluation of the fiat currency, than it does anything else. Now, there's other things that are going to add into it, which is why it moves up substantially greater than what inflation is. But if there was no inflation, I mean, Bitcoin, I don't know that it would be here today. Worst case scenario, I guess best case scenario is people would be treating like they treat everything else they trade. And it's fine to trade Bitcoin, but you got to know what you're doing. Because here's what happens with most people. They come in, they put their money into the market, they go chase shitcoins, they get rugged, they lose money, they don't know how to trade, so they're just taking really bad entries and exits and no stop loss and all that stuff, and they lose their money. And then they look there a year later and they go, dang, if only I had just put it in Bitcoin and just held it there. So you should do that with some part of your money, whatever part you have. And add to it. I would, to me, it makes the most sense to add to it as often as you can. Now, that doesn't mean you can't have money to trade, but you absolutely have to understand what you're doing, right? You have to be realistic with yourself. Am I good at trading? Am I consistently profitable? If your equity curve doesn't go up like this, guess what? If you're saying you're a great trader and your equity curve is going like this, guess what, folks? You're lying to yourself. Okay? I'm doing a dramatic kind of like pause here to let that sink in on you. I want you guys to get that figured out. Because there's still time for you to become really successful in this bull market. But it's not going to happen until you stop lying to yourself and you get serious about it. Okay? But stock market still got ups here. Again, up there. Tesla, this is a trade I talked about. This is one of my favorite trades currently in progress. We've got a very clean triangle here. We've got what appears to be maybe 1, 2, 3, 4, 5 up. So I'm expecting more of a pullback here and then to rally up further based on the height of this pullback overall. We've got a pattern target of 438.50. So yeah, looking for it to pull back right now. Probably, let me see here. Initially, target right here around 322.5. That's a 50% pullback. And you can see right here how it works. If you look left there, how it works as support along the way and resistance along the way over here. But yeah, so if you're looking to long Tesla, I would start looking right around that 322.5 area. See if you can get it there. If not, maybe you get closer down here to around 316. But that initial place would be around that 322.50. Look for a long, at least up there toward 438.50. Pretty easy trade, honestly. You like the pause? Let's see. You're talking about the euro. What about the euro? Let me scroll up here. Did you say something else about the euro? Let me see. Time. May we check the euro? Oh, you just want to see how it's doing there? Yeah, sure. Let me see. I guess we can just make a copy here real quick. All right. What's today? 15th? Yep. Euro USD. Let me see here. All right. I think Oana's got the volume. Yeah. So locally here, this is 3 waves down. So if you're breaking out above this point, 1.17888, you should be good to go higher. Simply, you can just get a quick pattern target based on height of this pullback up there around 1.21. You get above there. Locally here, looks like it could be 1, 2, 3, 4, and 5. So maybe an A, a B, and we'll get a C on a pullback here before it breaks out higher. But it looks like it wants to continue going higher there. And like I said, right here, it's 5 waves up, not 3. So this isn't corrective. But this is 3 waves down. So this is corrective if we can break out above that 1.1788 area. And like I said, pattern target-wise, we'd be looking up here around 1.21112 kind of area. I don't know why they did that. Let's put that back over there. So yeah, euro not looking terrible there, honestly. But then again, I was the guy who keeps saying DXY this and DXY that, and he keeps doing it. And at first, I always got all the yahoos online, and I don't mind if people have different opinions. I like different opinions, right? I like discussing. But my God, when you get on there and you act the fool and you think you're making fun of somebody, and then it comes back and they're right and you're wrong. You were making fun of somebody and you're wrong. I mean, it makes you look absolutely ridiculous. Why do people need that much attention that they're willing to make themselves look like that? I don't know. I don't do that, so I don't get it. But it is what it is, right? What are your top 3 trade setups that you're liking right now? God. I love the Tesla setup. God, I got to think. I get so many trade setups. Chris, you see it. We talk about so many of them. Gosh, I talk like 20 of them at least in market wraps every night. Yeah, but trolling can be fun if your goal is just to get a reaction, but that's why I ignore it. I'll end up blocking somebody that's trolling. And they're like, oh, blocking is weak. I'm like, no, it's just I don't want to deal with it. I don't have to deal with it. I'm an adult. It's not weak. You're silly if you think that, right? It's my peace and sanity, not yours. But no, some people really believe the nonsense they spew, Bernardo. Those are the ones I'm referring to on there. No, Chris, it's all right. Let me see here. So yeah, so I like that Tesla setup. Gosh, what do I like? I like Sui. I like Solana. I like Ethereum. I don't know. I can really pick 3. Right now, I like Sui. I like Solana. I like Ethereum. I mean, of course, I like Bitcoin. Stocks, I like, what do I call it? Tesla. I think you should be watching UNH. I've talked about that at the Academy. Yeah, that's what I'd be looking at the moment here. Novo is another one you should be watching. I like the potential for a setup right there. Potential macro low. Yeah. So, Let me see here. So yeah, I mean, unfortunately, I know that was more than 3, but you know, I don't just have 3. By the way, guys, I'm also not the type of trader that goes out there and just scans and tries to find the market leader and all that. I don't have to do that. I can make money with whatever, you know, stocks and cryptos are out there, right? I don't have to look for a market leader to try and do that and hope to get in. So, you know, for me, trading is something that happens over time. It's nothing that happens the immediacy. It's not that one trade that you're in at the moment. It's the culmination of your trade over time, your trades over time. So that takes a lot of pressure off me because I can then just focus on the things I'm looking for. Be able to do that. Does that make sense? So yeah, let me see here. Looks like BMNR pulled back into a 4th fair value gap, 4-hour fair value gap. Or did he go higher from? I don't know. I don't even know that I have a BMNR chart. Let me see here. BMNR. Tom Lee's company. Well, I do like that pullback. We get that low volume node sitting right there on the, you know, on the daily. Yeah, I think we're overall probably higher up. As you said, the 4-hour though. Let me see here. Where's the lows here? 30, 60, 30, 30. Okay, so lows right here. I would look to see if we get some rally from here, but I could see this dropping further down to, well, it probably wouldn't be down here. It'd probably be closer because this is this week's fair value or this week's pivot. It'll move up. So I would say I could see it potentially falling a bit further here, maybe down to $50, 50 and a half, potentially. Right now, this is looking like 3 down. So if we can break out above 63.75, I think that would be a good chance that we'll at least get a bit higher, you know, pattern target here. At least up there. Well, that's actually a pretty good move. Right around $85. Right up into this fair value gap here. Yeah, so if we can rally up from here and break out above 63.75, I think that completes maybe like a flat, a WXY on a flat here. And then we get that movement up there toward that $85. But if it does continue to break down further, I'd be looking here around $50 as a potential next target on that way down. And, you know, for that. Let me see here. Cardano. Let's see here. I haven't looked at ADA in, geez, forever, I think. Maybe it's been sooner. Oh, well, June 11th, it looks like I looked at it. I don't remember. Oh, yeah, look at that. Okay, did pretty good there. But I think I don't know, is that going to be a 5 or is that going to be a 1? So it kind of hit where I was looking for it to get up there, or it pulled back. Let me see here. 1, 2, 1, 2. What's that pullback? Potentially. This is 1, 2, 3, 4. This looks like 5 done. So I believe we'll get a pullback here. And this is what you're going to see on a lot of alts. I think we're getting a 50% pullback Probably here maybe to 83.50 would be my target. But looking at this, I'm thinking this has got to be I'm thinking this has got to be more like this. Let me see what that would be for a pullback. Yeah, at 50% there. I think that's a 1 and a 2 here. So I'm going to bring this down more like this. And that'll give us a 5 right there. That'd be a 1 and a 2. And then, of course, again, looks like 1, 2, 3, 4, 5. So if we can continue to pull them back, like I said, minimally here around 83.50, potentially down here around 77 cents even. That's the 70 and a half. So I'm not sure where that will go due to, where it's going to go. But we can look here and go, well, if this is a 1 and a 2, that will get us a minimum expected wave 3 target up here at $1.80. But if this is going to be a 1 and a 2 here, I think that's going to overextend. You just kind of get some guesstimations going on here. Well, I don't know. It might actually just get up there. Yeah, so we'll look there around $1.80, about $1.81. It's kind of my next target on the way up there for ADA. Okay. So looking pretty good there as well. After the big, long pullback more recently here from December of 24 until June of 25, 6 months on that pullback. Connect deck. There we go. But yeah, so you always mention the 50% pullback. I can't remember the importance of the rule. It's Dow theory. Dow theory is this idea that that it'll pull back 50%. Yeah. Mark, have a great day, bud. Appreciate you, man. Anyway, so that's really what I kind of want to do today, guys. I've got to go a little bit early, unfortunately. I've got some things I got to get taken care of that are time sensitive. But yeah, again, my big thing today was like, listen, the Fed's dual mandate, inflation is really what's driving them right now. If you wonder why he hasn't cut rates yet, what I explained there at the beginning about unemployment and CPI and PPI and all that coming together, that's why. So again, do we expect to cut in September? I think the odds are significantly less now. We'll see how the unemployment looks for next month. But again, I think the only way it changes, the only way we get them thinking about rate cuts right now with inflation doing what it's doing is if we have serious deterioration in jobs, over the next, 2 months, come up over the next 2 readings. So if we do that, then I think it puts a lot more pressure on them to do cuts. But if that doesn't happen, no, I don't think so. I think we continue to stretch it out a bit. And again, I'm going to have my thoughts. I'm going to do everything I can to get them out finally this weekend. My Bitcoin, the idea of a super cycle or an extended cycle and all these things, they're at hashandhedge.substack.com. If you guys want to join up for that, it's free. It's an easier place for me to publish than, publishing long form, on X or anywhere else. So anyway, yeah, we'll see how Trump and Putin do in Alaska. That'd be interesting. But hey, listen, guys, if you're not a part of TWC, we'd love to have you there again. There's still a few seats open for our annual program. So go there, members.texaswestcapital.com. Look up the liquidity cartography cohort. For the annual, go in there. We've got a 2x money back guarantee. And also you can use the promo code 2X, so TWOX. one word altogether, and you can get half off. So you get 50% off. Plus, if you do the things you're supposed to, and you're not a measurably better trader there at the end of the year, you get double your money back. You know, the reality is most of y'all that don't know what you're doing are going to put it in the market and lose it anyway. So at least now you have a chance for me to hold on to it for you and give you twice that back, which is better than the rate of inflation if it didn't work for you. But I'm pretty damn sure it's going to work for you. We've got a lot of history, a lot of people that it's worked for and continues to work for. So check it out. All right. Yeah. Well, if they're on a fishing trip together, they might lose their wallets, right? Their Bitcoin wallets. All right. Listen, if you're in TWC, don't forget, we'll be live trading again on Monday, 8:30 a.m. Central, 9:30 a.m. Eastern. And working on passing my, sixth prop account over the last few months with y'all. So, you know, we teach a lot of that as well in there. But whether you're an investor, a long-term trader, a long-term swing trader, a day trader, scalper, whatever, we cover it all. And so, plus you get Fiboswani, and you get Vince and Andrews, our head traders there. You get their analysis throughout the day and their charts that they're watching and trading and everything else. So, plus you get our stuff and the trainings every week where you get, you know, more potential trading opportunities, as well as you get our daily updated charts, more trading opportunities. Plus you get the market wrap that I do every weeknight, which usually, like I said, has about 20 charts on it. Potential opportunities for trading there as well. So not only do you learn, but you get lots of opportunity to trade as well. So if you do join, please say hi. We'd love to welcome you in, make you part of the family. It's a lot of fun there. Got some really great people. As always, remember, the only thing you control is how much you lose. Please keep working on that risk management. I hope you all have an amazing weekend. You get away from the charts for a bit, recharge, and I'll see you next week. All right? Take care, everybody.